Syog, hi, morning. Great to be
Morning.
speaking with you. Wanted to understand, when is it that you're expecting to see resumed traction now in the US markets back to previous levels? And how much of an impact are you really anticipating in terms of your margins, your contributions, capacity utilizations, pretty much all the metrics?
Yeah, no, I think it's indeed, a great positive for the country and for the sector as a whole. The US accounted for almost 20% of India's chemical exports, and especially for us, 18% of our revenue were coming from US. So it's a relatively big deal for us. I think we never vacated US market. I think we resumed the US exports in the last quarter itself. But what this deal will allow us to do is to sort of stabilize those volumes, grow, and at the same time, some of the margin impact which we had taken on the account of these tariffs will now partially get released. So in that context, we expect the margin profiles of the US exports to improve going forward.
By how much would that be?
So look, I think roughly on 40% of the portfolio, almost we were paying full tariffs, and part of the impact was absorbed by different stakeholders in the value chain. By us as well as some part of it by client. So I think everyone in the value chain will benefit, is our sense from a margin standpoint.
You can give us a sense of, this is a 18% tariff which is coming in for you. There has been a rupee, depreciation which also has helped you in some way. What will be the effective rate of tariff for you once you, see the tariff and the rupee depreciation coming into play?
Yeah. No, I think so. We'll have to do the detailed calculation, but I think what's more important, and we're still waiting for the fine print to come out, even in terms of US-India deal. But I think what we have to look at is from a mid to long-term point of view. Ultimately, there are two regions against whom we compete for US, right? One is China and one is Europe. I think against China, which is roughly at around 50% tariff level, if you put together all the duties, versus where we will be, 18% plus, the base customs duty, depending on the product. I think we'll have a significant advantage. So that should, push us up in terms of our share in the US market and our margin profile in the US market. And EU, though they have a slightly lower tariff levels than us, but from our cost competitiveness point of view, we should be able to, do much better in terms of our market share against this place. So from a mid to long-term point of view, both from a volume and margin point of view, I think this would be a hugely supportive for the sector.
So I just want to distill that a little bit more. So you suggested that 18% of your top line comes from the US at this point. Maybe there's some upside to that given this deal. Yes. And you suggested that 40% of that you were absorbing internally, the tariff impact of that, 40% of that. Am I right?
No, I think you'll have to segregate the product portfolio into three things, right? A part of the product portfolio was exempt, which was part of Annexure 2. A part of product portfolio we were paying full tariffs, which is roughly 40% of our total exports to US. And a part of product portfolio where our customers were able to claim back, the tariffs, because ultimately end products were re-exported out of the US. So I think in 40% of our exports to US, there will be a huge impact in terms of margin relief. I think on the remaining part of the portfolio, the impact would be partial. But as I said, I think we have to look at the overall sentiment, because what is important is that the decision making for the last 6-9 months was very, very muted, right? People were waiting for clarity to come. People were not taking decisions in terms of capex. People were not taking decisions in terms of signing multi-year contracts. I think all of that will now start accelerating. And I think that in general, from a mid to long-term point of view, would be a big positive for the chemical sector.
Suyog, that's roughly 10% of your top line, right? Which will likely get impacted, which was subject to a 50% tariff, which you were absorbing completely, almost entirely, which now goes to 18%. Talk to us about how the competitiveness of these products, this 10-12% of your top line, is versus some of the other countries who you are competing against, and how tariffs are over there. Give us a texture, a flavor of that, because now you might likely have to absorb only the differential between other countries and you. Just give us a sense as to how much is that. Okay, I believe we have Suyog on a bad line. Okay.